Alright, let's talk about SBB today. You've seen me cover Vonovia, Medical Properties Trust, and if you follow the channel for some time, you know that I really like property companies right now because they're very low valuations out there, and I see a parallel to banking stocks after '08. And if we do a quick historical lesson, for example, the Swedish stock bank Swedbank, if you bought them at the bottom, it was below 20 Swedish kroner each, you would get the more than the amount you invested on a per share basis in dividend per year now. So there's crazy potential when the market is extremely fearful. And in the case of the property sector, I believe that this is the case. And I think that SBB is a company that I will build a position in long term. Why? Well, stick around to find out. And we will take a look at how this 5 billion Swedish kroner company is undervalued, in my opinion. We can see some dividend data here as well. This is based on historical data, so don't look at that. You will see more regarding this dividend in the cash flow statement as well. But alright, into the meat of the video. Let's take a look at some numbers. But first, statement from the CEO in the beginning of the year-end report. He talks about a wish for interest rate cuts. Of course, that's going to be bullish for companies, so some copium for shareholders and investors indeed. And if we take a look at the balance sheet, there's nothing strange going on here. I remember back in business school when I did the accounting courses and I did a lot of analysis on properties companies, we would see 1/3 equity, 2/3 debt as the standard debt to equity ratio for property companies in Sweden. And if we take a look at total equity here, we see almost 36 billion, and then we see total equity and liabilities is 107 billion. So just divide this with the total and we get about 1/3. So indeed it's quite normal. However, we see current liabilities, the short terms that needs to be paid in a year or less. We can see that current liabilities here 15 billion and then long-term liabilities 55 billion. So they seem to not have anything super pressing, and I think that gives them some time to breathe. We will also see that they've settled some things in the cash flow statement if we take a look at it, because they have sold off some properties. So what we're looking at right now is the consolidated cash flow statement, and we can see that a lot of the loss that came from the year was a result of write-downs in the value of properties. So in the cash flow statement here, if you look at your screen right now, I have highlighted the position. For those of you who are not listening, it's changes in value property. So we can see a loss here with 17.5 billion. So we have to add that back to the cash flow statement in this case, because it's not a real loss, it's a write-down, it's accounting principle. Although we can argue that indeed property prices have dropped quite a lot. And then we have some goodwill impairment as well, so we had to add that back because it's not something you pay out. There's not cash flowing out of the company as a result of this. And then we can see that cash flow from operating activities before changes in working capital was an increase by 1 billion. Alright, very interesting. And then it changes from the working capital here. We see operation receivables, an increase there as well. So we see some good numbers there. And then investing activities, disposals of subsidiaries, less cash and cash equivalents. So we can see that there's been some sell-offs. The company is not buying new properties, it's selling off properties, rather getting that cash that they need to do the financing activities. Here we see that they have repayment of loans, 38.8 billions. Quite a lot of repayments in this case, because remember, this is millions of Swedish kroners that this statement is in. So we can see that it's very expensive, the financing activities, and it's quite straining for the company indeed. And then we can also see here that dividend paid, indeed they paid about 1.6 billion in dividend to shareholders, and that's why you see that huge ratio here of 38%. So 1.6 billion on a market cap of about 5 billion comes out to this number of dividend yield. So that's where it comes from if we analyze the number deeper. But as you can see, a huge company, we're talking a balance sheet of billions, and we're talking a market cap, a stock valuation of about 5 billions. And that's what I'm talking about when I say that the property sector is severely undervalued. We have so much fear. Who wants to buy a company that has to sell off properties to cover debt? Will they be able to renegotiate? And I think that in terms of the property companies in Sweden, I think that the risk to reward ratio for this is good for me. It's a high risk play, obviously. But it's like you say, if you owe the bank 2 millions and you can't repay it, it's your problem. But if you owe the bank 55 billion and you can't repay it, then it's the bank's problem. So in my opinion, common sense opinion, I think that this company is too big to fail in that sense, and I think that they're going to have to negotiate with creditors. Indeed, the creditors are going to get a sweeter deal. They're going to leech off some more of the company's profits, but it's not going to be a bankruptcy application in Swedish courts, most likely. And those type of actions really drive down stock price rapidly, as we've seen in some examples. But very interesting company indeed, and I think that this company has the right ratio for me to stock up a few shares, build a position to where a significant change in stock price would actually be meaningful for me and change the financial situation for the better. So I'm going to have to pick up a few thousand shares in this company, and then we're going to just wait and see and stay patient, as with every investment that I make. Alright, that's been it for this video covering SBB, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now, bye bye.